Taking back America, one consumer at a time. It's the Krieger Files.
And we're back after the break. Thank you for joining us here on this Friday, September 20th. Wow. Look how close we are to the election. And all of a sudden, Fed Chairman Powell, first he unleashes chaos across the markets with not a crisis at all, 50 basis point rate cut. Well, and then he says the U.S. economy is in a good place, and our decision today is designed to keep it there. Yeah, it's to manipulate the economy because the next time the Fed meets, the voters are going to already have cast their vote for the next president. And, Powell, when everybody was asking him these proverbial questions about, well, is there any political means to what you just did? No, we just don't do that. But, of course, Kamala says, the rate decision is welcome news for Americans. And see, they're all capitalizing on it. Democratic Congresswoman Maxine Waters of California, she could open her mouth. And it's just craziness. I mean, the economy is in a tailspin. I told you earlier in the show, and we've got Fred Dashevsky here with us at uscoincapital.com. For those of you who do not know Fred, you need to get to know Fred. He has a toll-free number that you can call. Good morning, sir. How are you? Welcome back to the show.
Hey, good morning, Dave. How are you today?
Doing fabulous, as always. We're looking at this. I talked to some people at a chamber event last night, the mortgage brokers, and they're all saying we haven't seen any end result yet. So what's your take on what Powell just did?
Well, first of all, for the mortgage people, there is a lag between Fed policy and when it actually has its impact on the economy. These are not instantaneous results, and therefore actions coming immediately. So, there's about a 6-month lag for when the Fed institutes a new policy for it to really filter its way through. Now, a lot of times, of course, there's some speculation, and what will happen is people will say, well, we know this is now the case, so we can kind of move in this direction knowing where we're going. So, I think this will probably help on the mortgage side of things to lower the cost that average people are paying for a mortgage. I don't know that it's significant enough to make any dramatic differences, but there it is. So I think the expectations were for 25 basis. They did go 50. It's an indication that the Fed is feeling that the economy is strengthening enough because it is still fighting the same battle it's been fighting since roughly the year 2000. And if I could take a second, I just want to back up because in order to really kind of get why the Fed did what it did or the significance, we just have to back up a couple of years. You just got to go back to 2020. So when COVID hit, the entire U.S. economy, as most people recognize, really came to a screeching halt. We were all told, like you were saying, we got to stay at home and, don't go out, don't do anything. So, businesses suffered and the economy came to a very, very, very dramatic slowdown. In fact, the worst economic environment in terms of growth that the U.S. had ever seen, with the exception of roughly the Great Depression. So outside of that, this was a horrible economic environment. Now, the Fed's efforts to move economic environments forward are usually done by altering interest rates. If they lower them, the idea is that the borrowing cost of money goes down, therefore we increase activity. You and I will spend more money if it's cheaper to borrow. More mortgages will happen if it's cheaper to buy the house than if the mortgage rates are higher. More people will buy the car if the cost of borrowing the money is less, et cetera, et cetera. And the Fed stepped in. And not only did it drop rates to zero, which was a little bit overdone, but it also instituted quantitative easing where it began to purchase bonds directly from the U.S. government instead of having the government have to sell these bonds into the open market. So these things combined stimulated economic activity. Now the problem becomes is how far and how fast. Do they overdo it? And how soon do they need to start raising rates? Because if you let the economy simply run on cheap money, you end up with an inflationary problem, which is exactly what we experienced. So as the inflation began to kick in after 2020, the Fed had to start thinking about reversing this process. It cranked rates up from 0 to over 5%. And this increasing rate hike began to have an impact on slowing the economy. But we had problems because people were still very suspicious about whether or not the Fed was really on track. And herein lies the problem. The Fed attempts to be non-political. And I really do believe, after studying the Fed for 40 years, it is their intention not really to be political, although they recognize some of their actions, look, they're going to have an impact. But the Fed is faced with a really fundamental issue. Can we balance this where we can keep rates low enough to create economic activity, but not so low that the economy runs too hot, then we have an inflation problem that requires the Fed to raise rates? So Chairman Powell is fighting, and I've been calling it, he's walking a tightrope. And they're guessing. I mean, I was looking at the Federal Reserve's economic data that the St. Louis Fed provides, and the Fed's balance sheet is still at $7.1 trillion. That's assets that the Fed holds on its balance sheet. That includes, believe it or not, mortgage-backed securities, almost $3 trillion worth. Those go back to 2008 that they have not been able to get rid of yet. And their balance sheet was only $4 trillion in 2020. It was at $9 trillion at the peak. They've been able to bleed off about $2 trillion over the past year or two. But again, they are facing a real fundamental problem. How do we balance this act? How do we do this so that we can guess going forward whether or not we're overstimulating the economy or understimulating the economy? And I don't know that the Fed's going to be able to manage this quote unquote soft landing without creating some volatility. And meanwhile, I'm sure you probably noticed gold hit a new record today.
It sure did.
$2,600 gold now. That puts it up 30% since January of this year. And this is a response to the U.S. dollar beginning to fade around the world, not only because of people's concerns about the Fed actions, but also because of the de-dollarization issue, where countries around the world are trying to use less dollars and all their other alternatives instead. So we're in a very strange economic environment, but the gold price, $2,600, and silver, $31 for silver. I mean, it was $18, not less than, what was that, 2.5 years ago? Incredible movement so far this year.
Smokes, that's almost double. Now, the thing is, and folks, I buy my silver from Fred. You need to be doing that too. He has a toll-free number. Write this down, please. 1-800. Some of you, if you're using your cell phones, you don't have to put a 1 in front of it unless your local carrier requires you to, but it's 800, all right? 878-2646. And he has a website. You can go on there for more information at uscoincapital.com. I buy my silver from Fred. You need to be doing it too, and you tell him I sent you so he knows that you heard it on the show. Now, the thing is too, Fred, you were bringing up what's going on with all these hedge funds and what the Fed is holding on to all this paper that they can't get rid of. I mean, this is like Goldman Sachs, and I know you remember this way back when. I've talked about it on the show. They were selling this stuff out of the United States, calling it AAA when it was junk, and they knew it. And so the Fed, I mean, is this pretty much the same type of posturing? They can't get rid of all these 2008 based bonds and securities because of the fact that they're garbage. And we know they're garbage.
Exactly.
So
the Fed was faced with this choice, right? So how do we deal with this? Do we let this stuff just blow out? And that meant, of course, affecting everybody that had been buying and investing in these mortgage-backed securities. And like you pointed out, it was the credit rating agencies that gave these things AAA ratings when they were absolute crap. They were total garbage. I mean, any economist, anybody, any CPA could have looked at it and said, no, this is not a viable investment. This is something that is based on over-leveraged, really ridiculous positioning, and they were marketed to everybody from pension accounts right straight through to individual people on the basis that they were AAA. Without that AAA stamp, the credit rating agencies, these would not have been allowed into the pension accounts, which is where the bulk of the purchasing ended up going. So we ended up with so much of this crap floating in the markets. Now, there was no way to unwind it. But the Fed understood that if it didn't buy this stuff at some sort of value, and it paid 100 cents on the dollar. It paid full value for these things when it bought it off of the balance sheets of the investment banks to save them from having to write off this, massive amount of debt. And it did so with the intent of trying to then subsequently sell this stuff off over time. Well, that was in 2008. Here we are in 2024. They still have not been able to deal with that. And in the meantime, since 2020, they've accumulated trillions in other assets, mostly in the form of treasury bonds, and they continue to buy them directly from the government which enables the government to not have to find another buyer. So, it's like you're piling up garbage in a town, and the garbage disposal area is completely filled. But a guy comes to you and says, well, I own an island, and it's got so much free area. I'll take all your garbage, and I'll take all your garbage. You just dump it on me. So, everybody moves the garbage. Well, finally, this guy says, okay, I can't take any more of your garbage. I've got enough. I've got to start giving garbage back to you now. But your stuff's already filled up. So where's the garbage going to go? And this has been the problem the Fed is facing. So when the Fed intervenes, it artificially stimulates economic activity. It creates a false environment. This is where all this volatility comes from, is false environments created by the Federal Reserve. It should take itself out of the mix.
I know.
And this is why gold and silver are going up in response.
You got to love it. We'll be back with this discussion after the break, folks. Stay with us, man. You're getting a lot of education here this morning. Don't go away. We'll be right back. Okay, here we are rocking in the saddle one more time. We appreciate you joining us here. Fred Dashevsky from USCoinCapital.com. That's capital with O-L, not A-L, right? .com. And he is your guy when it comes to getting junk silver and gold. Fred, welcome back. We're looking at this latest. Atom Data has come out and said, and this is something they really monitor the marketplace, which is why I use them a lot. 79,540 single-family homes and condos in the U.S. were flipped in the second quarter, which represents 7.5% or one of every 13 home sales nationwide during the months running April through June of this year. Now, this is kind of interesting because these are fix and flippers. These are guys who are investors that actually buy, and we're talking about in one quarter, in a 3-month period, only 80,000 homes. What does that tell you about the stagnation of the economy at this point?
Well, certainly, I think a lot of people are going to play the waiting game, with the idea that we didn't know what the Fed would do, how fast this will have an impact on mortgage rates. And mortgage rates had hit higher levels a few months ago and began to drift. I think a lot of people began to speculate on the idea that, well, if I sit back a little bit, maybe I'll be able to get that mortgage, half a point or a point cheaper. And that's, important. And I think that's smart. So a lot of people are definitely playing that game. I think this is also the reason a lot of people have been buying gold and silver. And I think the reason the central banks have been doing this too is that they all seem to have the same expectation that whatever the Fed does, the economy the way it is, looking at the U.S. dollar, the debt that's now $35 trillion and growing. We're adding about $1 trillion every 100 days now to the national debt. It's totally nuts. You were getting a driving amount of capital, and there's still several $1 trillion, up to about $3.5 or $4 trillion that's sitting in the U.S. banking system from people that don't know what to do with their capital. So I think the interest rate environment is such that if I were looking to buy real estate, I might also play that game of waiting a bit just to see if I might get a cheaper rate, and play that opportunity, if you will, that the Fed has lowered rates. So I'm trying to figure out ways for people to be able to benefit from this economy. So I have put together a little special for your listeners. I can offer a $20 gold piece pre-1933. This is a United States circulated U.S. $20 1-ounce gold coin for $2,750. Gold itself is over $2,620. So this is a circulated, delivered to your door, $20 gold coin for $2,750. For those interested in silver, I put together a package of 166 silver quarters for $1,000, actually $999, and we can package the two together. We'll discount that another $50 for $3,700 even. So somebody can get started owning a gold coin for $2,750. They can get into the silver for $1,000, $999 to be exact. Package the two together as a bundle, save another $50. I think people should absolutely be aggressively accumulating physical wealth right now. The U.S. dollar index has dropped to 100 from about 105, where it was just a few weeks ago. The lower the dollar index gets, that means the weaker the U.S. dollar is against world's currencies. The weaker the dollar gets, the more expensive things become for us. And it is something that people have to pay attention to, because the U.S. dollar's value, unfortunately, is eroding faster than the banks are paying interest. So that means it's a losing proposition for these people that are sitting on these trillions of dollars in their bank accounts. They need to do something to diversify And again, I'm not saying to take all your money out of the banks. Please don't take this wrong. I just think people should diversify a portion of their wealth into something physical that they have possession of that has a far better chance of increasing in purchasing power than what's going to happen to the U.S. dollar going forward, regardless of who wins the election in the next few weeks. And I can't believe how fast that's coming up. My God.
I know. Wow. Yeah, it's crazy out there, Fred. And this is the thing, folks. That was a heck of a deal. Now, look, if I can buy my junk silver from Fred, you can too. So he has a toll-free number. It's 800-878-2646. I have that memorized in my craw. So, I don't have to sit there and read it off a script. Now, if you have any last-minute questions right now for Fred, the number's 208-216-6100. Have anything to do with the economy. The thing is that, Fred, you said that people are basically sitting on it. A lot of real estate agents are, I can just see their backsides grimacing. Sphincters are puckering out there. I'll tell you, they're like, what are we going to do in the meantime? Well, folks, I think there are people out there that are contemplating selling their home. The idea is if you do it see, a lot of people, they're waiting to see who gets elected. It isn't going to matter. It's all psyop, isn't it, Fred? It doesn't matter right now. The economy should still be moving forward no matter what.
I have been through so many elections that people had expectations were going to have such a huge change in the economic environment, and they turned out to be, nothing burgers. So there are definitely things that change depending upon, who's in power, because they decide differently on how to address the problems that are fundamental to the economy. But the big picture is, and I hate to say this, but the truth is there's really nothing politically that can be done to alter the broad nature of the fundamental flaw, which is the fact that we already have a $35 trillion national debt that has to be repaid. And the problem is there's no political solution. The only option is to print the money. And the question is, how fast do you do it and what method do you choose? And then, of course, there is some reduction in government spending. And this is where the political parties differ in how they want to approach that, whether they want to give tax breaks in order to stimulate economic activity, or whether or not they want to raise taxes on certain portions of the public. But honestly, the election will come and go. The deficits and debt will continue to be a problem. The U.S. dollar will continue to fade in purchasing power. And regardless of who's elected over the years, gold and silver will continue to progressively become more valuable against paper money. So although I'm not trying to dissuade people from recognizing, hey, look, it's an important thing. We should be involved in the process. And I truly believe this. Americans need to be involved in the process. But I don't think economically there's going to be as much impact as people are expecting on the results of the election.
Agreed. And now this is the thing, folks. We can't all sit around and stagnate waiting for something to happen. We have to be proactive right now, which is one of the reasons I have Fred on the show. And you notice this is not one big hype for gold and silver, okay? Do you notice that? No, we're talking about realistic situations going on here. We already know, based on the attitudes of people, based on what the politicians are saying, they're going to say anything to get elected. And they're going to say anything to try to make and take credit for all the stuff that's going on right now, and they're going to welcome it as great news. The stock market bounced back, but you got to understand that they're only responsible for 8% of the economy and what's going on. It's mom and pops. It's the people out there that are buying homes as investments and trying to build some equity, and we're doing it based on the almighty fiat dollar. And people aren't paying attention to what's going on with the dollar. They just know that, hey, I got more month at the end of the money and I need to do something right now and be smart about my investments. So the idea is if you're going to sell your house, this would be the time to start thinking about it and getting a hold of a real estate agent to help you determine what its value is going to be. And unfortunately, it's going to be in U.S. fiat dollars because nobody's taking gold and silver coins to buy anything like that, are they?
That doesn't happen too often, although I have a number of customers who have actually used gold and silver coins to purchase homes. But I do find that a lot of people do end up, once they've sold that property, again, then the question becomes, what do you do with the capital? So if you're not going to buy more real estate, the options were, okay, we put it in the bank and we earn the pittance of interest that they're willing to pay us. But again, against the rate of inflation, which is much higher than what the government says it is, by the way, It is higher than what the banks are paying. So that is a losing proposition. And that does leave people with sort of an awkward option of what to do after the fact. So for those that have sold real estate, we've had a lot of people that have been buying. I had more six-figure deals in the last month than we've seen in probably the last 10 years, just simply because of that fact that people sold properties, ended up with large amounts of money, and decided they would rather own gold and silver than leave it sitting in the banking institutions or try to make a profit, in the stock market, which has become quite volatile. So, our inverted yield curve is beginning to unwind. That has been very detrimental to small businesses. That is definitely improving. There are definitely signs the economy is getting a little stronger. But again, we are walking a tightrope. So that means that things could go awry at any moment. And listen, I would rather be a year early than a day late. That's all I can say. And for those people that have hedged their bets over the years, that have taken our advice, and over the last 35, 40 years have accumulated gold and silver, they are so happy they've done so, not only because it has provided them with wealth protection, but it's also been profitable. It has been going up in value, so they've been actually gaining. And I think this is where we will be going forward. So for those that haven't done it yet, it's a great time to look into it for the first time. We've got a great staff here that will help explain, answer any questions that you have. And again, as the dollar continues to fade and we print more money and the gold and silver prices continue to climb, it's certainly a great idea to have a little portion of one's wealth in this physical world.
Okay, now how many quarters do you get for $1,000?
It turns out it's like 166 quarters, or $999.
See, that's
about
a deal.
$6 a coin.
Yeah, $6 a coin, folks. And see, the thing is it's just going to keep going up. So this is the time to split off some of your funds. Call Fred, have a conversation, ask him the tough questions. That's why he studied this stuff for years. He's got history in this. So, don't worry about it. It's a sound investment. You should be doing it. But again, the economy, you have to keep it moving forward. If we all sit here and stagnate and do nothing, we're all going to pay for it in the end. So, uscoincapital.com, 800-878-2646. In the meantime, we'll be back on Monday to pick up where we left off.